Hey guys, this is Jeff, Swing Trade Warrior with WarriorTrading.com, back with another weekly closed swing trade recap. We had a pretty big week this week. We had some massive winners. We're going to talk about those here shortly. Despite the choppiness and volatility in the broader markets, if you know where to go to find the volume and the buyers or sellers working in unison, there's still a lot of opportunities to profit out there. It takes a while to learn to understand and read market trends, and especially in volatile conditions. And nobody's 100%. We had our share of losers this year, but overall we are still profitable. We are hovering at about a 65% win rate on the year so far, and very proud of that going forward in these conditions. And we're going to talk about some of the trades that have helped, some of the setups that have helped maintain that level of profitability in these markets. If you guys have any questions about any of the trades I talk about, or you want to ask me any questions about swing trading in general, my contact info is down below under this video in the description, or you can email me, jeff@warriortrading.com. Always happy to answer questions. Alright, first trade I want to talk about is on SFUN. SFUN Holdings took this trade after it hit the scanner for us back here on, let me see what day that popped up, on 9/29. So we got a scanner alert on this. 9/28. We got a scanner alert on this. Now, if you notice SFUN, I'll zoom in here just a little bit. This thing has been chopping around sideways for the past couple months, trading inside of a range under $6 and above the $5 area for quite some time. Now, the indicators that I use are mostly moving averages, and they do use TAS indicators, the market map and the boxes specifically. And you can see the market map also, these long horizontal lines reflect a lot of churn and in volume between buyers and sellers at this 560, 580 price level. So we're getting a lot of chop here. Without any kind of catalyst in play or some kind of market direction to really help push this thing out of a trend one way or the other, you're going to see a lot of this with stocks trading sideways for long periods of time. What we got here on 9/28 was the scanner alert. We put in this little 4% move up here with a close at the top of this range, just below the top of the range. But the important thing is that we got this big move on a day where we saw high relative volume. Now, high relative volume is important. It's one of the most important indicators that I use because it gives confirmation to trends, new trends that are forming, and by that I mean breakouts or breakdowns. If you see a lot of buying volume come in relative compared to the previous few days or even a few weeks, it might indicate a shift in sentiment between investors. So when you get a high relative volume spike up, and it's associated with a 4% move like this, we look at the chart after it hits the scanner and we see, okay, well, this thing's coming up off a bottom here and it's still trading in this channel, but we're just under this resistance area, and now we're seeing buying pressure start to come in. So we can expect some shorts to cover. We got to move up and over the 20 EMA. A close above that is bullish. And now we're looking for our profit potential on this trade. So, I look to this next resistance area here on the chart. I drew this blue line in around the 645, 650 area. Now, why there? Because just like in my courses, I teach that previous resistance will always become, almost always become support, and previous support will always become resistance. Now, we know that $6 mark, which we were struggling to get over for this long period of time here while the trade was setting up, is an area of resistance in short term. But if we look back, it's an area of support back here in July. It's also an area of resistance and support right here in March. And if we go back even further, we have this little tap down here. February 2nd, 2015, it tapped the $6 area and acted as continued support. And I mean, we could zoom this chart out and probably find other levels of support and resistance that are similar to it. Same thing back in here. We see support at the $6 area all the way back to 2013. So point is, previous support becomes resistance, and previous resistance becomes support. So now that this trade's hit off the scanner, we get a high relative volume move just under that support level, we might finally be ready to break above it. Excuse me, that resistance level at $6. We get long at $6 the next day. The next day was a much higher volume day for us. It was even higher than the day of the alert, so that's good. That's confirmation that we're in a breakout, that the buyers are controlling the price action, and we get this move up intraday. This is a daily chart here. Now we popped all the way up to the 650 resistance area that I identified. We hit a high intraday of 647. Why did I identify that area? Previous support back here. If we scroll back in time, we'll see it acted as resistance through here, and again as support and resistance back all the way to January 2015. The point is that you just have to draw a couple of lines and it becomes really clear what your targets are going to be and what your range is on a trade. If you see something with a lot of lines every 10 or 15 cents, then it's not really a clean chart, and then maybe you don't have the best risk reward set up on this trade. So we got long on this trade at $6. It popped up to 6.5, just under 6.5. Never tested our entry. We got a 7% move intraday on this, very quickly. I scale my profits out. I take full size initially, and I scale out taking profits every 5 to 10%. So I'll sell half at 5%. I'll sell half of my last half at the next 10%. I'll sell again at 15 and again at 20. Meanwhile, I trail my stop up at low of day as we're continuing in a candle over candle formation. So we got a close on the day of the entry right at the 50 moving average, right? Also very bullish here. We didn't hold the 50, but we closed right under it after piercing it, which means that the next day it's a good sign, since we pierced it the previous day, that it's going to be much easier to get through. Sure enough, we popped up the next day. We hit a high the next day of 670, and it was a lighter volume day. Volume started fading a little bit. We didn't really, I scaled out another half on the move towards 670, and I put in my stop at low of day, which was 645. How did I come up with 645? I used the low of day, moved my stop up. Remember, our entry was $6, and it also happened to be this resistance area. Remember, previous support becomes resistance, and previous resistance has now become support. So if we break the support area and we break the candle low on the daily chart, that's what I would consider an exit indicator. If we're in a breakout trend, we want to see trend continuation. We want to see candle over candle. We don't want to see daily candles making new lows. Unfortunately, this was a very choppy day in the market with a very large swing in the broader indexes, and we did get stopped out at 645. Which was fine. We stopped out with about 5% profit there. It was a 7 or 8% total win by the time I was out of the trade. Unfortunately, the next day, this thing popped all the way up to 734. It hit a high of 734, or a total move from our entry of 22.5%. Now, I was already out of the trade because I was respecting the rules of the trade. I'm not going to give the trade more room than necessary, and I'm not going to give the trade less room than it needs. I use the strategy, and it's very profitable, and it's very easy to manage your risk in doing so. And I'll show you an example next of a trade we took where using the strategy saved us a ton of money. So if you stayed in this trade, and we did have people from our chat room that did stay in this trade and were able to have much bigger gains than I did, so props to those guys and girls who were able to do that. That was a sweet trade. Who knows what it'll do on Monday? It's at the next resistance level already. It closed just below 730. So we're going to see some resistance there, and maybe it keeps going, maybe not. But we're out of the trade, and we moved on to some others. And this trade lasted us a total of 3 days. 1, 2, 3 days. So FCS. FCS was another one. Very similar chart pattern to SFUN. We have this consolidation period from back in late August where it's trading sideways in a range, and it starts to pop up off the bottom on high relative volume. It's approaching this resistance area. Now, this is a little further from the resistance area than SFUN was, but nonetheless, it's a very similar setup, and there's still a lot of room inside this channel. We got long on this trade over the high of the previous day's high, along with break over the 20 moving average. Now this thing gapped up on us. So normally I don't like to trade gappers for swings because the probability that they make an attempt to fill the gap is often higher than not. And so in this case, let me zoom in here. We got long After the open range at about 1390. This thing popped up to a high of, my line. This thing popped up to a high here of 1413, the date of our entry. So we had about 23 cents on it or so. I was looking to start scaling out in the 1430s. The next resistance area is going to be the 1445 half-dollar area, and I wanted to take a little bit of profit along the way before we tested that area of resistance. It would also have been about 4 or 5%. So we didn't make it there. Instead, what happened was the next day we saw a big sell-off. This thing gave up all its gains and quickly moved down. Now my stop was at low of day on the day of the entry of the trade at 1375. This thing broke and sold off all the way down here to 1319, making a low about 70 cents from our entry. Because we had a tight stop, we only had 14 cents of risk on this trade, 15 cents of risk on this trade, when we were looking for at least 45, 50 cents before we even started scaling out. So right there, that's a 3-to-1 reward to risk ratio, and that enables you to be a very profitable trader. In this case, it didn't work out for us, so it was a small losers. Now, if you look at my trade blotter that I keep on the website, you'll see that in general, most of my losers are anywhere from 1 to 3% on the high side. Most of my winners are all 5 to 8 to 10%. And I'm guilty of getting out too early, getting shaken out too early. But you know what? I'm making money and I'm able to stay profitable doing what I'm doing. Some people have a little bit more risk tolerance in these market conditions than I do, and that's fine. And they are able to stay in some of the winners longer. And they also stay in the winners a little bit, losers a little bit too long too. So, like I said, this is a very rule-based strategy. If you follow it, and it's very easy to be profitable. In this case, like I said, this turned out to be a loser, a 14 cent, 15 cent loser for us, and that's fine. It was only a few $100. You know, our SFUN winner paid for that about 3 or 4 times over, and that's why it's important to understand your risk-reward ratio and your profit and loss. You know, our winners are 3 to 4 times bigger than our losers, so we have one winner, we can sustain 4 losers and still be break even. Very important to understand that. So that was our loser this week. We had 2 other winners. Small one on Netflix. I took an options trade on this. I alerted it yesterday, Thursday, October 1st. What I saw here on this was, zoom out a little bit here, it's a little bit easier to see. So Netflix has been trading in this range between 95 and 106, 105.50 or so for the past few weeks. We ended up getting a nice move to the top of the resistance area. The market has been in somewhat of a relief rally recovery area. You know, while it's still trading in its massive range, while I still think the broader markets go lower over time, you know, that doesn't mean there's not opportunity to capitalize on the directionality in between the range. So I was looking for the long over 106 on this and a move back to 111. Why did I choose those areas? Well, 106 happens to be this area of resistance for the past few weeks, and it also happens to be an area of support just a few weeks before that. So again, previous support over here. Let me draw a circle. Previous support becomes resistance, future resistance. I chose the 111 area on the chart because if I blow this up, you can see that there really isn't any kind of previous support area to identify until you get to 111. You know, there's a little bit of resistance here at 110, and there's a little bit more support at 111. So my target for this trade was about 4 or 5 points, and I figured all it would take is one good day because the ATR on the stock is about 5 1/3 points. You know, one good day on the stock, continuation, candle over candle, and boom, we're at that resistance area. So I bought some at-the-money weekly calls. Well, unfortunately, Friday the jobs report came out today. The market gapped down, and it opened up much lower and sold off. Netflix opened up much lower and sold off. During the course of the day, the market recovered, and so did Netflix. So we were able to trade out of this. I did not have to average down, but I let the market trend lift Netflix. Netflix is a very it trades with the market on a very one-to-one type of pattern. It's a high beta stock, so there's a lot of volatility in it, and it's going to move with the market. So when we're looking at this, there were opportunities to scale in down lower. but since it was an options play, and I wasn't sure if the market was going to finish the week strong or not, I didn't want to risk any more capital. Now, when you trade options, your risk of loss is 100% of your investment unless you're willing to stop out. I did have a stop in place at about 50%. We did not trigger the stop, and this thing came back up, and because of late day volatility and a surge in price, I was able to get out for a small 13% win on the options contracts. Now, these were next week's weekly expiration, so I had another 7 days on them, but because of how time decay or theta works on the weekly options, it's not really something I wanted to hold in a carryover next week. I wanted to see this break out of this level and move into the range back to 111. The fact that we didn't get that move today because we blew out the ATR recovering after the gap down in the markets, I'm not so confident that Monday is going to be a strong day. It could, and this could easily go back to 111, but I had money to pay myself with today, and that's what I did. So I took the trade off the table. I was being safe and focusing on my other trades. The other trade I want to talk about that we took this week was on IMGN. Okay, now this was a swing trade. I'm currently holding my last third, and we'll talk about what happened with this today. It hit the scanner yesterday after forming a nice bottom here. This is what we're looking for. This is more of a reversal trade than a breakout. We're looking for candle over candle confirmation and a move back up. We're looking for a move, ideally, to the next resistance area. We find that by looking for previous support. We know that previous support will become resistance. And so we have the 200 and the 20 moving average EMAs right here. Also at this previous support level of about $11.90, $12. So my target on this trade was for a move back to the $12 area, and we're looking for a couple days of candle over candle. The ATR is $1 on the stock, so it shouldn't take very long to get there. We got long on this trade over the previous candle's high. Once we got the candle over candle confirmation of the move up, we had high relative volume at the time. We got long at 10. I got long at 10.33. Okay, I didn't get in at the entry, the exact entry that I wanted, but I did get in over the candle high as this thing was moving up. It hovered around our entry for a while, and then this thing late day shot up. Now this is a biotech stock. It trades very closely to the IBB, which is the NASDAQ sector ETF. Biotechs were on fire Friday. This one was no exception. We ended up getting a 10% intraday move on this stock. It hit a high of 1096 all in one day, and our 1033 entry, we were able to scale out about 5 or 6% through this move here. So I paid myself every 5%, and I'm down to 1/3 my size with the stop just under the $0.50 here, looking for the actual move back to $12 on Monday or Tuesday. Now, I have a profit stop in place with a 1/2 point cushion and a 20-cent profit stop beyond that. So I'm very comfortable with where this trade is at, and looking forward to a much bigger win. This was a huge intraday hit in the chat room when it was alerted. It took a little while for it to gain some traction, but the IBB caught fire at the end of the day and closed up nice and strong. IBB closed right under its resistance level here at 316. If it breaks that resistance level, it has room to 325, 330. One of the other stocks that was on my watch list that took off so early in the morning, I did not get a chance to grab it because I was day trading, was on THRX, another biotech stock. This thing was on watch over 788. Why 788? Because it's the previous resistance of this little range here. We have this nice candle over candle recovery pattern. IBB is strong, the relative volume is strong, so biotechs are going to want to recover. This sell-off right here also overlays with the IBB sell-off in the last few weeks. We're looking for recovery, in all of these stocks. The ones that have the most range and the best chart setup are definitely the ones that are the most interesting. This thing shot up to a high intraday of 868. So just about 90 cents from our entry target. We did have people in the chat room who were able to get in and capitalize on this. This thing moved, like I said, about 15% all in one day. So kudos to those guys. I did not trade this, unfortunately, but it was on my watch list with a buy suggested price at $7.89, $7.90. And the stop price at the $0.50. So those who heeded the watch list advice, they got paid today on this stock. Another interesting correlation I want to note here is on the TAS market map to the left here. You can see this histogram with all the colorful horizontal lines. The TAS market map is a histogram that shows volume at each price level. And the longer the line is, the more competing buying and selling volume there is, the more churn you're going to see in price action. Once we broke over these long red and yellow lines here, we get into these violet or blue lines, and those indicate areas of less congestion between buyers and sellers. So we call these squeeze zones. We get smoother price action through those areas. Now, the next area of contention or churn is going to be at the $10 mark. This thing is only at $8.60 right now or so. I expect that we can get to that area, which is also a previous previous support area. So I expect $10 to be resistance, and I also expect that maybe we'll hit some resistance at $9.50 at the moving average still for a $7-8 stock. That's a 20-30% move, and it's going to be an enormous winner if it gets there. So congrats to everybody who's still holding that one. We had some amazing trades this week, some really good setups. Like I said earlier, these conditions suck for trading overnight in most cases, especially with mid and large cap stocks, because they do tend to trade so closely with the market. There are opportunities, though, and knowing how to find them and knowing how to trade them are what keep you profitable and keep you in the game year-round. The market is very cyclical, and these conditions happen all the time, whether or not it's because of macroeconomic conditions or, it's just a seasonality thing. It doesn't really matter. Finding these opportunities, there's always a way. And if you know where to look, you know how to trade it, and you have a strategy with rules and a good risk-reward management system, then you will always be profitable. If you guys have any questions about anything we talked about today, then, like I said, my contact info is below. Hit me up. I have no life on the weekends, and I'm always happy to help other traders out and answer any questions. So if you guys have any questions, please be sure to contact me. Other than that, I hope everybody had a great week. Looking forward to next week, and we'll see what we can pull out of the market then.